In the stock market, you're betting on what other people will think the price will be of something in the future, and you're not getting any yield, or you're getting very small yield. But in real estate, you're betting that you can maintain or increase the income that is coming from this asset.
Welcome to the Going Long Podcast. I'm your host, Billy Keels. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And it gives me great pleasure to welcome you back to another fantastic conversation with another one of our amazing guests here on the Going Long Podcast. And after 149 episodes, I cannot believe we've already gone through that many episodes, so many wonderful conversations, you and I together with all these wonderful guests. You are now part of a community that is in the top 2% of podcasts around the globe, which is pretty phenomenal, given that there are about 2.8 million podcasts around the globe. And thanks to you and your continued support, continued downloads, you are now part of a community that is really trailblazing in terms of bringing value to everyone. And so a lot of that is thanks to you in the different, honest, written reviews as well as ratings that you're leaving us. If you haven't left one and you found value in any one of the episodes, go ahead and make sure that you leave us an honest written review as well as a rating. We made it really simple also too. We have a link here in the show notes, and you can just go right there and do that. But thanks to you and congratulations for being part of this community and continuing to support everything that we're doing. So also too, I know a lot of you have been asking, hey, look, Billy, I've missed a couple of the episodes. What do I do? We've also made that really simple for you. If you go to the website, which is billykeels.com, and at billykeels.com/podcast, you can see every single episode, every single conversation that we had with all of our amazing guests. And once again, that's billykeels.com/podcast. You can find out all of the different episodes that have been there, which are absolutely phenomenal. And one last thing before we talk a little bit about today's guest and today's conversation, you're going to get a lot of value out of this. A number of you have asked me as accredited investors, you want to know more about what are some of the different things that we're doing. And, you know, if you want to find out more about that, and if you're an accredited investor, and once again, accredited investors are someone who have $1 million of net worth, not including your primary residence, or someone who is making $200,000 individually or $300,000 in income, you know, in terms of annual income for the previous 2 years, and you're expected to do that now. And there's also a new way that you can do it through taking some tests and things like that. I don't know all the specifics there. You can go find out about that as well. But if you're interested in knowing more about what are some of the different things that we are also doing and becoming part of a group of people that have common interest, you can go to AI Club at billykeels.com. Once again, that's AI Club at billykeels.com. Just let me know you're interested in finding out more about some of the things that we're doing and become part of our accredited investor club. And we'd love to have the conversation. So with that stated, today's conversation, you're going to get so much value out of today's conversation. Today's guest not only started out as someone who was a teacher and mentor, really loved that, and then, you know, teaching in inner city schools, and went from teaching in inner city schools to then becoming a financial advisor, and really a financial advisor around the paper asset world. So really has a solid foundation in understanding a lot of different of the conversation and talking points from financial advisors. And so then to see that evolution, became an accidental landlord. You'll find out more about this in the conversation. But then from there really has seen the number of options that can create for your life when you understand more about how money works, understanding how real assets can help to bring you more value, having more freedom of time, and now has even become a full-time passive investor. So I know that you're going to get a lot out of today's conversation. I know I enjoyed the conversation with today's guest, who is Jim, and we're going to find out more about that just after this. Whether you're an active investor or a passive investor, you really like your day job and you want to continue to go into your day job every single day feeling better, knowing that you've created the right options for yourself. At the same time, you just don't have enough time to really get your head around, spend all the hours investing long distance. Well, One way or the other, over the last number of years that I have been investing long distance, I've really understood a number of the major mistakes that you should avoid if you want to get to creating the right options for yourself much faster and being able to create more income sooner. And if you want to do that, if you want to understand more about that, I've made it really, really simple. You can just go to billykeels.com/7 mistakes to avoid. You can learn all the things that the 7 major mistakes that I've seen over and over again that I want you to avoid. Once again, you can go to billykeels.com/7 mistakes to avoid. So if you want to learn how to successfully build a cash flowing portfolio and doing that from left field, then guess what? Today's the conversation that you're going to want to listen to until the very last word. You know why? Because today's guest not only started his career as a financial services teacher. Yes, I did say financial services teacher. I'm sure he'll tell us a little bit more about that. He also did time as a traditional financial advisor. Yeah, I did say do time. He's also the president and founder of multiple companies such as Leftfield Investors. And he is also the host of the super popular podcast, Passive Investing from Leftfield. It gives me great pleasure to welcome to today's conversation, Jim Pfeifer. Jim, welcome to the show, man.
Thanks for having me. That was a great introduction. I appreciate that, and I'm super happy to be here.
Hey, Jim, it is awesome. I'm going to hold off because there's something that I actually want to jump right into, but there's kind of 5 questions that everybody gets. You're going to get 2 in the beginning, you're going to get 3 in the end, and then in the middle, you and I are just going to, help people get to know more about you and what it is that you're doing and how you're helping other people get closer to their goals and their dreams. So if it's okay with you, I'll go ahead and jump into the very first question.
Absolutely.
Which is, can you help us understand where exactly do you live in the United States?
Well, it's a place that you might be familiar with. I live in Columbus, Ohio.
Columbus, Ohio. So anybody watching the video version, and if you're not watching the video version, go back and watch it, because as soon as he said that, you saw something happen to my face. I won't tell you what it was, so go check it out. So Jim, and everybody that's part of the Going Long family is used to this by now, but when we get 2 people from Ohio, here's the thing. OH?
IO.
Yes, there you go. All right, fantastic. So
absolutely.
Awesome. So listen, you've helped us understand where you're from. Also, let's start out with some positivity. What's the most positive thing that's happened to you in the last 24 hours?
Well, work-wise, the positive thing that happened is that a couple of deals announced that they're going full cycle 4 years sooner than they should have, because they've already achieved their targets in less than 2 years. They're self-storage deals. And in less than 2 years, they achieved their 6-year goals. So I'm super happy about that. And then on a personal note, our refrigerator got fixed.
Hey, congratulations on both of those.
Yes, sir. Thank you.
Fantastic. Absolutely fantastic. Fixed refrigerators, those that are working, that's always a good thing. And being able to go full cycle at 50% sooner than you thought is absolutely fantastic. So congratulations with that. And Jim, listen, I always try in the first couple seconds to tell a little bit more about your story. Almost impossible task I give myself to do in like 10, 15 seconds. So could you do me a favor and do the entire Going Long family a favor? Could you help us understand more about your backstory? And if you could also talk to us about some of the different decisions that you make to get to this part of your journey, and then you and I will pick it up from there.
Yeah, sure. I think as I was thinking about this, the thing that encapsulates my whole business career is teaching and education. I started in business for 11 years, and the company I was working with, they had a strong mentorship program. And as soon as I'd worked there for a while, I realized what I really enjoyed was being a mentor. And that was one of the focuses of my career there. And then when I left there, I became a teacher. I was working in inner city schools in Columbus and teaching finance and accounting, but really I was teaching life skills. And I really enjoyed educating people. But what I missed was it's a little bit harder with high school kids because they're not as excited about being educated as other people. And so I moved on to my next career as a financial advisor. And I thought I knew everything about money. I was a big stock market mutual fund guy. And the more I started learning about money, the more I realized paper assets are not where I wanted to be. But again, I enjoyed teaching people about finance. But the hard part there was it was trying to teach people and then kind of cajole them into doing what was best for them. And they weren't having it. So that's a very tough business to be in. I really liked educating and I really liked helping people. But at that same time, I was transitioning. I was doing a lot more active investing in real estate, because as a financial advisor, I learned that real estate is where you make your money, not in the stock market. And it's funny because if that's your philosophy, you can't really be a financial advisor. I believe strongly in only in having my clients invest in things that I was investing in, doing the same types of things. And since I was getting more and more into real estate, I wasn't licensed to advise them, number one. Number two, I didn't get paid for it to advise them to go into real estate. So there's that constant conflict. And I finally just exited that and went full time into active real estate, and then transitioned to what I do now, which is full time passive investing in real estate syndications. I believe that the best way to build wealth is to buy real assets that produce some kind of cash flow. And, hopefully there's an upside to it, but I'm not relying on the upside. I'm relying on the cash flow. And that's my philosophy. And so I started a group called Leftfield Investors. And what we do is we're a place where you can network and learn and get educated on investing in these real assets, produce income, passive syndications. And that's my full focus right now.
Well, so I love that. And having you take us through that journey, right? From having this love of teaching and educating and mentoring, and having gone through that, whether it was on the financial services side of things or whether it was teaching high school kids. And then you realize, well, it kind of in something inside of you had this conflict that was like, hey, look, I enjoy investing in these real things that I can actually touch and feel. And I'm in this job and trying to help people understand how these paper assets can help them. But there's this kind of conflict. And I think we're going to come back to that a little bit more. But probably the one thing, and I believe I know the answer, but you mentioned left field already. I started talking about left field. And so it's kind of, I guess, come out of left field having this conversation. But maybe you can help people understand, like, what do you mean when you say left field investors? What does that mean?
So the way the name came about partially was, my former financial advising colleagues, when I would talk about real assets and the things I was doing, they were like, oh, Jim, man, you're way out in left field. And so that's kind of where the name came from, but it kind of also morphed into when we talk in our community, when we talk about left field, then we're talking about real assets, we're talking about passive income. And when we talk about right field, we're talking about 401ks, stock market, what everybody is typically taught by Wall Street banks and all that kind of stuff. And then we have center field, where we have people that kind of migrate from right to center to left. And the center fielders are some people that do both, because it's not that the stock market's bad. To me, it's speculation, right? In the stock market, you're betting on what other people will think the price will be of something in the future, and you're not getting any yield, or you're getting very small yield. But in real estate, you're betting that you can maintain or increase the income that is coming from this asset, right? And so you'll pocket that income. And then because the income is growing in that asset, you are forcing appreciation. So you're not relying on the market. You might get market appreciation, but you're going to force some appreciation. So the value of your asset increases. And that's the left field, right? You have a real asset that's producing real income, and then the bonus is the appreciation. In the stock market, you're hoping you can find someone else to sell it to for more later. That's it. And that's speculation in my book. So a lot of what I've learned through being a financial advisor and after is the difference between investing and speculation. And in my mind, real estate is investing. You're investing in real assets that are giving you something, producing income for you. Speculation is when you buy something and hope that you can sell it to somebody else for a lot more later.
Fantastic. So you can either sell it for a whole lot more later or a whole lot less later, depending on which side of the equation you want to be on in those secondary markets. So, and I love the way that you break that down from left field to center field to right field, because to your point, there is no one right answer. It's just a matter of how are you using these different tools. And being here, you have a lot more people that are in left field with you. And also too, we have a number of people that are still in high paid corporate roles, and they are kind of in that center field. And maybe for those that are listening the first time, they're probably in right field and they're starting to move towards the center. So exactly. I guess one of the things that I would like to talk to you about, Jim, is here at the Going Long podcast, we are really about helping people also understand, because one of the things that happened to me in the beginning is, I mean, everybody knows I live in Europe. And so I've been investing exclusively back in the United States through different real assets, not just real estate, but energy equipment, ATM machines, all kinds of different stuff, mobile home parks, a lot of different things, but doing it from a distance. And so fundamentally for many people, that's like, well, how can you possibly do that, either actively or passively? Now, I know you have many, multiple dozens of investments. And so I'm just curious, like, what is it from your mindset that said, okay, well, you love Columbus. Like I really, really love Columbus as well. But there are also other investment opportunities that go beyond Columbus. That can scare a lot of people, especially when you're talking specifically real estate, because we've always been told, like, invest right where you live, invest in your backyard. We fundamentally believe that you don't have to do that. But maybe you could talk to us a little bit about what gave you the mental fortitude to say, okay, listen, I'm actually going to place my own capital in an investment that is actually not in downtown Columbus, but it's, maybe hundreds or if not thousands of miles away.
Yeah, I think if you're going to be a true passive investor, you are going to rely on other people. That's it. There's no other way around it. You have to rely on somebody else to manage your asset. And what I realized first, active versus passive, my active was where I was hiring property managers to manage my active investments. And then I was managing the manager. That was not passive. That was frustrating. It's really hard to find a good property manager. So if you go into the syndication space, you're hiring a professional asset manager who's going to manage that asset, hire a property manager, and do all that stuff. And they're going to do it so much better than I am, because that is their main job. That's all they do, is manage assets. So when I look at investing somewhere outside of Columbus or in Columbus, it's all the same to me, because I'm finding a partner that I know, like, and trust. And that's said a lot in this industry. But what I have learned, especially since I started Leftfield Investors and we started talking as a community, is that, you're putting all of your faith in this operator to do what they say they're going to do and produce for you. And so it doesn't matter if they're in Columbus or Dallas, because I'm not an expert. I'm an expert in finding the syndicator, finding the operator, vetting them. Now, I'll look at a deal and I'll look at a market and I'll do my own evaluations there as well. But I'm trusting that the operator is going to be able to, they know way more than I do. And I'm not trying to duplicate their work. So I really don't care where I'm investing, meaning as long as I have a good operator, I will look at the market, right? As long as people are moving to the market, jobs are growing, incomes are growing, all that kind of stuff. Of course, I'm going to look at that. But whether it's Columbus or Dallas doesn't really matter to me. It's nice if it's in Columbus, because maybe I can go look at it. But you know what? I probably won't, because that's not my job.
That's not my job. I love that you just said that. So, and there are a lot of people that are watching and listening to us. They are in these high-paid corporate roles and just like control, right? And so one of the things is, you're talking about the stock market. There's a lot less control, in my opinion, there than there is investing directly in a company with a team that you actually know their first name, their last name. They know your first name, your last name. You're not number A44899 dash whatever. But I guess one of the things that I would love for you to talk about is, for someone who likes to have a lot of control, that can sometimes be very difficult to delegate the control over maybe hundreds or thousands, if not millions of dollars, to someone else. So maybe talk to us about what that process typically will look like as you're getting to know a key partner or a syndicator, someone who's bringing together people's common goals and dreams, the way that I like to talk about it.
Yeah, I guess I would back up just a little bit, right? If you're what we call a right fielder and you're investing in the stock market, whether it's mutual funds or individual stocks, right? Let's say you're investing in Apple. You're not calling up Tim Cook and saying, hey, how are things going, right? You have zero control. Not only that, let's say you could call up Tim Cook and ask him what's going on. And let's say he tells you, and then the market implodes and he says, hey, Apple's going to do great. Don't worry about it. Apple stock is going to drop 20% because the market did, regardless of how that asset is actually performing. And so if control is your thing, you don't have it in right field. So it doesn't matter if you move to left field and do passive investing. The thing is, like you said, you have much more control, because, I was talking to a sponsor yesterday and he's like, oh, hey, Jim, yeah, you're already in 2 of our deals, aren't you? You're in this one and that one. I'm like, yeah, okay, awesome. He had a file on me and he knew which deals I was in, and that's great. So I feel like I have much more control, because I can call them up and ask them questions and say, hey, how's the asset performing? Not only that, they all send me quarterly reports or monthly telling me how the asset's performing. I mean, so does Apple, but have you ever read a 10K or one of those financial documents? It's all mumbo jumbo. The stuff I get from my sponsors is, hey, rents went up 3%, occupancy is 95%, things are looking good. So or we're struggling and here's why, and that's fine too. It's all about picking the sponsor, and this is why we concentrate so much on that, because the deals that I have that I'm uncomfortable with, that I invested in, the deals that I wish I hadn't, are all deals that are with sponsors who are not communicating to me. And whether they're going well or poorly, it's frustrating because I can't get any answers. And so I don't invest with sponsors like that anymore. And I've put procedures in place to make sure that I know as best as I can ahead of time before I invest that they're going to communicate properly with me. Because these are the huge difference between investing in real estate, especially in syndications, and investing in the stock market is liquidity. You have none with a syndication. Once you put your money in there, you're stuck for 5 to 10 years. And the syndicator is the one that gets to decide when to sell, not you. That's the difference. The stock market, yeah, you can sell anytime you want. So that's a huge difference. And that's where you lose the control when you're in a syndication. But if you pick your operators correctly and you pick your allocations correctly, my thinking is you're much better off in what we call the left field or in the syndication world.
So by being in that left field and the syndication world, I tend to agree with you, and a lot of us that are watching and listening also too, because it's a higher control. But maybe you can, because you mentioned that you have processes in place now that help you minimize the potential of working with a key sponsor or an operator that's not going to provide you the reports. If it's not sharing your secret sauce, would you maybe help those that are thinking, wow, Jim, he's talking about a lot of things that resonate with me. I never even thought about the whole thing. How do I know if someone's going to communicate or not? Maybe you could share one of the things with the Go Along family.
Sure. And, the best thing about syndication, this passive investing world, there's no secret sauce that somebody isn't going to share. Everybody shares everything because you're not my competitor. Right. Even as two syndicators, they're not necessarily competing. They're working together sometimes, which I love about these kind of communities. But okay, so the question is, how do you figure out if a sponsor is going to communicate? There's a couple of different things that I do. One is, and this is new for me, but I almost only invest with new sponsors if they are referred to me by somebody else who's invested. Because, there are some syndicators out there who are great podcasters and great marketers, but I don't know that they're great asset managers. Now, they could be both, but I don't know. And so I started out by reaching out to a lot of people that I found, and that was a great way to do it. But now that we've built a network and we have a group, Leftfield Investors and other groups that I'm a part of, if I get a referral from somebody and they say, hey, I've invested with this syndicator for a year, 2 years or whatever, the deal's going great. That's number one. That gives me a lot of confidence. The other thing I do is I test them ahead of time. I see, are you going to respond to me? Because I want to make sure that you're going to respond to me in a timely fashion, in a quality way, before I send you a check for 50 grand. Because if you don't do it before I send you money, you're not going to do it afterwards. And one of the ways that I do this is we have a deal analyzer at Leftfield Investors that kind of helps people. There's like 30 metrics you can plug in there, and it turns red or green depending on if it fits our metrics. But what I do when I analyze a deal, all the things that turn red, I type up an email, I send it to the syndicator asking the questions. And yes, I do want the answers to the questions, but really the test I'm doing is, are you going to respond in a timely manner? And are you going to give me a quality response? Or are you going to say, well, just watch the webinar? That's not acceptable. I'm giving you $50,000. You need to respond to me within a solid 24 hours or have a reason why. And it needs to be a quality explanation. And then I take it one step further. And when they respond, I always respond again with another question, because I want to see, I want to know details. I'm going to ask you questions. And if you're going to get upset at me for asking another question or a follow-up question, then I'm just not going to invest with you. There are plenty of syndicators out there. And I want the one who gets that second email and then either answers it, or what happened recently is someone says, hey, you want to set up a call? I'd love to dig in deeper with you on this. Yep. Those are the kind of operators that are going to respond to you and be communicative. And that is what I need as a sponsor, as an investor, is I want to know, how is my deal going? And I want to know that if I send you an email, you're going to answer. If I call you, you're going to answer it.
I love that. And being able to give us two very crystal clear steps that you use. Number one, being able to look at existing referrals. And yes, this is a very small world. So if you have that network, if you've already built that network, or if you're listening or driving or running on the treadmill now and you're thinking, well, okay, well, how do we start to build this more of this network? I'm sure Jim and I could give you a couple of good examples of how to do that or where to go. And I'm sure Jim will tell us at the end as well. That's the first point. The second point is, it's really important for you as the individual to make sure that the sponsorship team resonates with you in the communication style that you like. Because in the exact same way that Jim is giving us the example or is sharing the example with you, that these are the specific things that he likes. Maybe your criteria are something different, but whatever it is, and to Jim's point, is make sure that the sponsorship team is helping you in communicating in a way that makes you feel comfortable. And Jim, I'll take this another step further. Make sure that when the sponsorship team is explaining things to you, it's in a way that you understand. Don't let someone speak over your head and you don't ask the question, because you may be writing or a check or a transfer for $50,000 or $100,000 or $500,000, whatever. But make sure you understand, because once again, you're in a position where you can have control and contact with the sponsorship team. It's not like contacting or waiting for a response email from Tim Cook, to your example from earlier, right? Because that
Exactly
may never
right.
come.
You're right. Yeah, absolutely.
So with that, and I appreciate you sharing that with us, Jim. That's fantastic. Very concrete, actionable steps. One of the things that I like about the philosophy that you have, and it's something that you share and you talk about, the fact that even though that you have a foundation in paper assets, you've also worked and now are helping people in the real asset space. You'll talk about the fact that there's no wrong way to build wealth, right? I tend to agree with you, but also help people understand, what does that mean concretely? You've kind of given us a high level, but I love the fact that you're saying that there is no wrong way to build wealth, but maybe talk about what that means to you. And then what are some of the, what does that mean to you?
So you're right. There is no wrong way to build wealth. There's more effective ways than others, right? And I don't know anyone, or very few people, who have built wealth in the stock market, right? Their wealth has come from somewhere else. They either own a business or they invest in hard assets. That's how you build wealth. You can do very well just having a W-2 and putting money in your 401k and retiring someday. You can do that, but you're not going to build the kind of wealth that you can through owning assets. And the tax code is built to benefit people that are building wealth through asset accumulation. So, but you have to do what's comfortable for you, right? Because if you can't sleep at night because you're so nervous having your money in real estate, then either real estate is not for you, or more likely you don't understand real estate. Because one thing that really drives me crazy about, my former financial advising colleagues and people that are all into Wall Street is they call what we do alternative, right? Yeah. It's the alternative space. Well, It's the place that you live in. It's the place you go when you go to work, right? It's the place where you put all your stuff when you're storing it. It's all of these things. These are real assets that are used all the time. It's not alternative. The alternative part is people don't know about it, and it's very hard to get into unless you understand and know things about it, right? And so, the entry point of $25,000 for a minimum up to $100,000, or like you said, $500,000, that is kind of scary to people. But you got to think, how much are you putting in your 401k? If you're putting in a couple grand a month, you're already at the $25,000, right? So it's just different that it's a chunk at a time. And I don't know if I'm answering your question because I kind of went off on a tangent, but the building wealth thing, I went from paper assets to real assets, and it's made a huge difference because it's not a get rich quick scheme. It's a build wealth slowly scheme, and it snowballs absolutely. You just have to get started. And when you see your first deal go full cycle and you gave someone 25 grand and they return you 50 and 5 years have passed, you're not going to get
or two.
or two. Yes, absolutely. You're not going to get that in the stock market unless you get lucky, because even if you're skilled at picking stocks, you have no control over the market. And when the market dives 20%, your stock's going with it, whether it's performing well or not.
Yes. And so you're absolutely correct on that. And, one of the things that you said, did you answer the question, yes or no? And to me, yes, you did answer the question, but it was the second part that I didn't want to ask, which is basically, there's no wrong way to build wealth. There are just ways that are much more effective than others. And
Absolutely.
so if you don't spend time getting educated on how the rules are set up, you may work for 45 years when you only needed to work for 20 years. Or if you really, really got things started early and young, you probably only needed to do 10 years and accumulate the right assets that were going to continue to pay you for the rest of your life.
Right.
And so, yes, there are no right way to build it. There are just ways that are much more effective. And if you are in the know, then why give your years away to someone else? So
Right. And even looking at that is, if you, depending on when you start, a lot of our group, they want to get out of their W-2. Also, a lot of our group like their jobs and just want to have other income streams, so they have options. Right? That's what you want to build in your life, are multiple income streams, so that if you love your W-2, keep working it. That's great. If you don't, then you have other options. Or if you love your W-2 and you just want to work part-time, if you've developed these other income streams, then you can do it. Or you love your job and that industry goes away, or that job goes away. If you have multiple income streams, it also builds in protection for you and your family.
Yeah, absolutely. And the whole protection aspect is something that is very, very important. The fact that you can do things privately, that's also something that's very important that most people don't think about, consider, until they realize that, hey, look, I've accumulated a whole bunch of assets over here.
Yeah.
But that we can go, you and I could probably talk about that forever and ever and ever. But so we won't necessarily do that today. Wow, don't you just love this conversation? This is amazing. This is fantastic. And so just really quickly, I just wanted to remind you, for those of you that are looking to create more options for yourself, get there faster, and do that with long distance investing, make sure that you go to billykeels.com/7 mistakes to avoid, so that you can avoid all those mistakes, get to your goals faster and sooner. Once again, that's billykeels.com/7 mistakes to avoid. Now back to the conversation. Help me understand. So what did you have something that happened in your life, Jim? Because when you're going down the paper track that made you say, well, hang on a second, I also want to build, because I know you talked about in the beginning that you were in the paper asset world, but was there something that in your mind or in your life or in your surroundings that also made you want to look at real assets, real estate?
Yeah, I'm the accidental landlord, right? We built a house. We still had our old house. It was 2008, worst time to sell a house. We couldn't sell it. Moved into our new house, rented out the old one. I hated being a landlord. Christmas Eve, bathtub's broken. I got to walk over there. I was just renting it, hoping the market would correct. And after 5 years, I went to sell it. And my realtor said, hey, this, and he knew the house was paid off. He said, I'll manage the rental for you. And then why don't you refinance it, and I'll sell you a couple more houses. I'm like, I looked at the numbers, because I'm a numbers guy. I'm an Excel guy. I thought, wow, that sounds easy and nice. And I did that, and bought a couple more properties, and they started cash flowing, and that was great. And that kind of just that lit the spark, right? That was what got me thinking. And at the same time, I then transitioned being a financial advisor, and we spent a lot of time educating. They were educating me on money, on finance, and the more and more I realized how it worked, the more I realized the products that we were selling, a lot of them didn't match what the best thing to do would be, right? And then that coupled with the fact that I was making some money on real estate, just, light bulbs started going off. And I thought, well, a single family home, that's working out pretty good. I ought to buy a multifamily, and that's a whole nother rabbit hole to go down on, because that wasn't active investing with property managers is not my strength. Some people can do it. That wasn't, but it got me to where I am today. So the whole journey I'm really grateful for. But, I just think that what clicked in me was accidental landlord, had some properties, and then I started digging in and learning about finance. And that's what made me want to not be a financial advisor, because I learned that that's not where wealth is built.
Okay. Perfect. That makes sense. And a lot of times when these accidental things happen in our lives, it can change the trajectory forever. And yes. So as you love being able to educate, mentor, you're finding that you are able to do that more and more. And I know that's one of the things that's really important for you, and one of the ways that you're helping make a positive impact today is through community. So maybe you can talk to a little bit more about that whole community aspect, getting involved, scratching the itch that you may have, because you're around people that nobody's actually talking about anything other than how lucky or how much this stock went up and that stock went down. And then you realize, well, did you actually get a deposit in your bank account. You just went through all that stress for no reason. So,
Yeah.
so when you can get around other people that have common interests, common goals, talk to us a little bit about that whole community and community building aspect that motivates you so much today.
Yeah, I don't think I realized it until just recently. So when I was active investing, there weren't people to talk to. So I started my own group of active investors in Columbus, and we'd meet. And that was great until I got out of active investing. And then I was like, well, how am I going to learn about passive investing? I'll start my own group. So it was going to be just 12 people in Columbus, Ohio. We were going to, have a dinner club or whatever once a month. And, our first meeting was going to be March 18th, 2020. And that is the week that Ohio shut down because of the pandemic. So we went on to Zoom, and we've been on there ever since. We've never really gotten together yet, but the community has grown. And what I thought, honestly, was I'd already been in a few syndications, and I thought I knew what I was doing. And I thought, okay, I'll just bring some friends and former clients, and I'll share my knowledge, and everyone will learn from me. And man, was I wrong, because joining this community, I have learned so much from everybody else. I am 10 times the investor I was a year and a half or 2 years ago. Awesome. And it's all because of community, not just referrals as far as better investments or better syndicators, but just talking through stuff. Like finding that, like you said, finding like-minded individuals, people that are interested in the same thing you are. Like you and I, we could probably talk for the next 3 or 4 hours because we're both passionate about this. Well, think about it. If you can find a community of several hundred people who have even half of that passion, then you're going to learn something. And every single person I talk to, I learn something from them, whether they are just starting out and haven't even gotten into a syndication, or whether they're one of our members who's in, 50 or 100 deals. Community on things like this, it really, really helps, because I remember the first time I met one of the now founders, Steve Sue of our group. I found out that not only did he invest in the same sponsor as me, he was in the same deal. And I thought, oh my gosh, here's a smart guy. He's a doctor and he's doing this. And it just gave me confidence. Like, okay, I'm not crazy for sending a wire $25,000 to someone in Canada that I don't even know, right? Someone else did it. And it's worked out. And so the more of those you get, like, okay, then I met some other smart people and they're doing the same thing. Yeah. And it just builds and builds. And I cannot emphasize enough the importance of a community. It doesn't have to be my community. It doesn't have to be your community. Find a community of people or several who share what you're going for financially, because we don't get education in the US. We don't get financial education, right? No. So you got to do it on your own. And if you're just waiting for Wall Street to tell you what to invest in, they will absolutely do that, but that benefits them, not you. And that's why a community that helps you is where I think people should go.
Wow. So that was awesome. So I appreciate that. And I'm going to give you the opportunity here shortly to talk about more about your community and things like that. Yeah. So this conversation is awesome, Jim. And I agree with you, man. I feel like I could literally talk to you for probably the next 15 days about everything from not just the financial stuff. We can talk about the Buckeyes and all that kind of jazz. But joking aside, so there is one thing that we kind of do have to get to, which is the going long final three, because, well, people want to hear about the going long final three. They want to find out more about you. And just before we get there, I would like to know just kind of one last question. And so typically when you are you have that teacher, the teacher kind of mindset, and you want to help other people in mentoring. And so maybe you could talk to us about kind of one successful case, and it doesn't have to be just where you knew that you made an impact by helping to educate someone else.
Well, there's a couple, we use TribeVest, which is it's a group investing platform, right? That helps people come together and invest together. And there's a group that it's some of my neighbors, some of my friends, some of my former financial advising clients, people that had never invested in real estate outside their home. And they had heard me talking. And so we decided, hey, let's start a group. We kicked in $150 a month, and we were saving up to invest in a syndication deal. And it took us a year. We got there, we invested in our first deal. And so all of these people that never knew anything about this world, because it's not, where do you go to find out about this? And so they all got into their first investment. We're not making tons of money, right? We invested $25,000 in a multifamily deal in Texas, or actually it's in Cleveland, sorry. And, we get distributions that are a few $100s, and, that's tens of dollars for each of them, but that's not the point. they're learning about real estate, they're learning about investing, and they're learning about syndication. So now we're getting into our second deal, but also they can start doing it on their own. And some of them are. And it's great to be able to get this to people that don't know about it. And that's kind of what we're trying to do is everyone knows about the stock market because that's talked about all the time, but no one talks about this, and it's fairly new. So getting people educated and helping them get started is something I'm really passionate about.
Awesome. And I appreciate you taking a couple minutes just to share that story, because it is when you can help someone just move forward and get started, no matter what the quantity is, it's the quality of the decisions that they made to actually move forward and get started down this, what for some people will be a new track. So appreciate that. And so look, Jim, here's the thing. We're going to get into the going long final three because it's about that time. So, but the thing is, I never ask anybody about answering the questions unless you tell me that you're ready for me to ask you the going long final three. Are you ready?
I'm completely ready.
I knew you would be ready, man. You were born ready. So here we go. So the first of the going long final three, we started with you over in that fantastic city, Columbus, Ohio. We're going to bring it back to this side of the pond now. And something we maybe didn't even get into that much, but help us understand, what is your favorite European city, either that you have visited or is still on your bucket list to visit?
Well, that's a hard one because I lived in Germany for 3 years, but absolutely my favorite all-time city is Cologne, Germany. It's beautiful. They have great beer. It's a wonderful city on the Rhine. There's some other cities in Europe that I really, really like, but I'll go to Cologne anytime, every time. I love it there.
Yeah, it's a very, very nice place. Did a cruise there one time and then went from there over to Holland and was a lot of fun. So very well placed in a beautiful, beautiful city. So
yes.
So appreciate that. And then I guess the second of the going long final three is really around, you're a very successful person, Jim. And one of the things that I've recognized throughout, interacting with lots of successful people is that they have one thing that's in common. And it's typically that they do everything perfectly. They never make any mistakes. And so because of that, that's one of even though I feel like I get that wrong every time and I get all nervous, or maybe it's by design. I'm not sure. No. So here's the deal. And most people know by now, but listen, so one of the things that happens is people that are very, very successful, they do something very differently, right? Everybody makes mistakes, learning lessons, opportunities, whatever you want to call them. But I've always noticed that people that are successful tend to do one thing differently. They actually stop and they learn a lesson, and then they apply that lesson to whatever the mistake or learning opportunity was. So would you share just one kind of lesson that you took away from a learning opportunity or a mistake that is going to help the Going Long family move forward faster today?
Yeah, absolutely. That's easy. I mean, I've made plenty of mistakes. But I think the one that I think can help the most, because you can avoid this mistake, is when you're dealing with a sponsor and they do one thing. Let's say single family home turnkey is this example, right? That's their specialty. That's what they do all day. And that market changes. And so it's no longer profitable to do single family turnkey. So they decide they're going to do office buildings. Or they're going to buy CBD equipment. And this is an actual example. So you're dealing with a sponsor who, yes, they know how to run a syndication, but they know nothing about office buildings. They know nothing about CBD equipment. And so they're switching their expertise, and they're not hiring people to put in place that know how to do that. So what happened with those deals? I lost money because I was investing in a sponsor who was doing something different and didn't have the expertise. So now I don't do that. You're in a new asset class, I'm out, unless, which one of my sponsors that I use, they got into self-storage. First thing I did, I said, who's running it? And they said, we hired this guy, new employee. He's worked in self-storage for 20 years. Okay, now I'm in. I might still wait for the second one, but I'm still going to think about it. But the only time I've lost money in syndications so far is when I've invested with a sponsor who has decided they're going to do something different, and it's not their specialty and they don't know what they're doing. And one little thing happens in the market, like CBD isn't as popular as you thought it was going to be, or a pandemic makes the office space harder, which actually this one failed before the pandemic. They just blamed it on the pandemic. So my recommendation is find sponsors, syndicators that are concentrating in asset classes that they know and understand. And if they switch, you switch too, meaning you go somewhere else.
Yeah, it's just stay on the sideline, like you said. Maybe wait for the first one and go to the second one. So appreciate you sharing that wisdom with us. And then, the absolute last thing that we like to do here, Jim, is feed our brains with knowledge. And so, could you share one? And I know it's difficult, but just one book recommendation that you would share with the Go Along family?
Yeah, it's actually not difficult. This is easy. If you are going to be a passive investor, you need to read The Hands-Off Investor by Brian Burke. Absolutely the best book. I buy books all the time, and I do not do a good job of finishing them. This one I read cover to cover a couple of times, made notes. I made 15 pages of notes reading this thing. It's phenomenal. If you want to be a passive investor, you got to read that book.
All right, The Hands-Off Investor, Brian Burke, fantastic. We'll make sure to include that in the show notes as well. And, I like these conversations, they fly by. Like, they literally fly by today. It was absolutely awesome. Appreciate you, sharing your experience with us, understanding just from your knowledge and desire to want to teach and mentor other people, starting out teaching in inner city Columbus schools, then being able to go from there to financial advisor, really focusing on the paper assets, accidental landlord along the way. And you start realizing like, hey, seems pretty cool. Let me do a little bit more of this and a lot less of this, because it's also not making me feel really good at night. And so from that, being able to actively invest, and you realize that you found this passion and desire for passively investing. Not only were you doing that and learning that yourself, you wanted to be able to build community. The pandemic happens. When the pandemic happens, most people would collapse. It provided you a new opportunity, a new platform to continue to build community and help to educate other people through passive investing world, and helping to understand screening, understanding more about just the financial world as it really is. It's not just paper. It's a whole combination of things. And so I know that I'm motivated to continue conversation today and conversations with you in the future. And I'm sure that the Going Along family is thinking, wow, Jim is really speaking my language. I really want to reach out to him. I want to find out more about what he's doing. So do us a favor, Jim. Can you help us understand what is the best way for the Going Along family to find out more about you, about what's going on with Leftfield Investors, et cetera?
Yeah, it's easy. Just go to our website, www.leftfieldinvestors.com. If you'd like to reach out to me personally, I probably talk to 5 to 10 investors every week. So please reach out. My email address is jim@leftfieldinvestors.com. And I'd love to talk to anyone who's interested.
All right. Fantastic. Well, Jim, listen, man, I appreciate the time that you've invested with me and the entire Going Along family. It's been an awesome conversation, and look forward to continuing the conversations with you in the future. Thank you very much from the bottom of my heart, man. Appreciate it.
Thanks for having me. This has been awesome. I loved it.
All right. Fantastic. And thank you very much, Going Along family. Looking forward to welcoming you back on the very next conversation. Until then, go out, make it a great day. And thank you very much. Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you like today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.